Hello traders, Cousin Vinny coming to you from theclosingprint.com, January 17th, 2021. In this edition of your weekend video newsletter, we'll discuss the indices, all of which moved lower last week in a very news-driven market where stocks that showed up to conferences or at CES did better than others. While the bond stock ratio remains bullish, HYG and junk are starting to back off a little bit, showing a neutral position, and most of our indicators are neutral, with 5 bearish, 11 neutral, and 4 bullish for the week. That's a big change from the previous weeks where we were mostly bullish. That said, the heat map has been improving for both the S&P 500 sectors and the international markets. And the gold-silver hedge is showing a lack of interest by institutions as far as a safety trade is concerned, while the US dollar moved higher last week, putting some pressure on foreign and international ETFs. And finally, we have Bukowski with 5 of 5 green with a CPI signal mostly bullish with 10 bearish patterns, 42 bullish patterns, and 62 patterns waiting for a breakout this week. Bottom line, we are neutral to bearish. We'll cover why we have that neutral to bearish stance, with the S&P 500 and Spyders below critical support, 377 and 3775. That's the gamma flip point. And with dealers long delta, they need to hedge. With a negative gamma, there's potential for selling into the Tuesday session, so we're a bit cautious to start the week. Starting off with the Spyder ETF Renko chart, we remain in a bullish trend until we see the first red brick, with the weekly chart consolidating from the October-November reversal pivot, breaking out of this consolidation. We're now up near 381, pulling back 1.46% for the week, but RSI remains above 50, and MACD remains in a bullish trend. The daily price action pulled back to the 21-day. We found some buyers there. We do have earmarked a 4% pullback if we move towards the 50-day this week, with the inauguration on Wednesday, and banks continuing their reporting on Tuesday. Price action was noteworthy on Friday as it was a monthly OPEX for January. And with Friday price action after the open, markets drove lower, then spent most of the day in the afternoon around 37.75 S&P 500, 377.50 on the Spyders, showing a potential to move back down to this lower trend line, and closing below that critical risk level that we outlined on Friday as well, the gamma flip point. Additionally, we noted that futures dropped at the close into the 415 period down to 37.50 or 375 for SPY, while VIX ended the day at 2375, well off the AM highs at 2580, and S&P options volume was very strong at 1.5 million contracts. Brent over at Spot Gamma also noted that closing below zero gamma level with poor post-OPEX seasonality is an unsettling situation for the markets. The catalyst for volatility to reduce an S&P 500 tailwind is Wednesday with the inauguration, which leaves a window for high volatility on Tuesday. You can also see that nearly all scenarios suggest dealers need to sell as OPEX rolls off, with the black line Friday's estimated position adjusting to the red line Tuesday's estimated position. The model suggests dealers are reducing long delta exposure. Either way the market shifts, dealers may have increased their long delta exposure to hedge. So as the markets shift higher, dealers may be selling into markets due to positive gamma. Should the markets break lower, there is a negative gamma to the hedge, which infers selling by market makers and dealers. So we're going to be cautious going into this week. with the possibility that we could test this lower trend line in the short term where major support resides. In addition, last week's bullish and bearish flow we were watching closely as the markets consolidate near highs, with the Nasdaq weekly gaining nearly 100% from the March 23rd reversal low. RSI still remains above 50. And for now, it looks like consolidation going into this holiday shortened week, with investors taking a break in observance of Martin Luther King's birthday. In addition, those of you paying attention to the Russell 2000 small caps, as well as some of the microcap stocks, all of which moved higher last week, the outperformance was noteworthy. While the other indices closed lower, the Russell 2000 ETF for the week closed up almost 1.5%, 127% from the March reversal low to the recent high. That's occurring on above average volume, and MACD remains above its signal line. So we'll look for outperformance again this week, or any change of character that would signal a potential pullback. A few of the indicators we're watching, in addition to gamma and what dealers might do on Tuesday to start the week, breadth is starting to back off a little bit, with the New York Stock Exchange advanced decline still putting in higher highs and higher lows. There's nothing to be concerned about just yet, but we are cautious going into Tuesday trading, as several different methods of breadth measure a pullback potentially to the zero line before regaining enough strength to bounce. Remember, the S&P 500 spiders were at the 21-day test and bounced on Friday, with the large caps, mid caps, small caps, and Nasdaq all pulling back. Note Nasdaq is the weakest, giving us more reason to be cautious in the Nasdaq 100 and the Qs, as well as the FANG stocks and market tech leaders, with the Nasdaq McClellan oscillator also giving us reason to be cautious. It's flat, slightly bullish, while the NYMO for the New York Stock Exchange, over 2,700 stocks, flat in a trough, could turn up, could continue lower. Another reason to be cautious. Starting off the week, VIX giving us a bearish signal on the 60-minute time frame, and the front month VIX to the 3-month volatility index neutral near 0.90, trending a bit higher, but not bullish just yet. In addition to a shift from growth stocks, as you can see, the ratio between growth and value continues to drop. So that's telling us, with the value in the lower panel, dividend paying stocks among other things, outperforming above the 21-day, moving higher, while the IGX, the growth ETF, pulls back below the 21-day, telling us to be more open to trading value going into the next few weeks, together with the S&P 1500 composite, which you can see the histogram is back down towards zero after a big spike last week. We could see a follow-through. There is a possibility we're seeing rotation. We'll cover that in a few minutes with the sector analysis. Take a little bit of caution on Tuesday. Maybe wait until 10:30, 11 o'clock before thinking about new positions. Wait for the institutions to tell us what to do, because there is some risk of consolidation, not necessarily one of a pullback, but certainly something that we should be cautious about going into the week. Bonds in the short term are showing reasons to be more cautious as well. Neutral to bullish as this ratio continues to drop. The moving average is rolling over. We're seeing a little turn higher, which is telling us just to be a bit cautious, maybe neutral going into Tuesday trading. Wait for signs from institutions, as high yield corporate debt and junk bonds show signs of some profit taking near the highs. Nothing to be alarmed about just yet in the short term, as RSI remains above 50 and price appears to be consolidating. In addition to what we talked about live last week with the S&P 500 versus the 30-year bond, oscillators turning higher, mostly bullish, but there is a possibility we can see some volatility, which we're looking for on Tuesday prior to the inauguration on Wednesday. Commodities like copper are consolidating recent gains, while West Texas crude and Brent both signal a bullish continuation in the markets as long as this is rising. If we were to see a drop lower in the short term with crude oil, that would be bearish for equities. So watch crude oil this week as it eases back up to this $55 to $60 a barrel mark going into the spring, with volume rising and MACD above its signal line. Additional mixed signals as gold continues to move lower along with silver, telling us that the safety trade is off for now. Despite the inauguration on Wednesday and Tuesday potential volatility as dealers roll off some hedges and exposure. Yet another reason to be cautious with a mixed signal, with the entire CRB index attempting a breakout of a descending pattern. So that could forecast something intermediate to long term in the months to come, that there is improvement in economic activity around the globe, and still have a reason to be cautious in the short term. Finally, we saw the US dollar strengthening. It's continuing in this descending pattern, nearing the 50-day moving average. Last week we told you that international ETFs would most likely pull back with strength in the US dollar. If we get rejected at the 50-day moving average, listen closely this week. If that should occur, look for the ETFs in many of those international markets to move higher, having pulled back to support in the short term last week. Another mixed signal going into the week is the sector heat map, updated every Friday from left to right in the top panel. We can see the last week improvement in the healthcare group, oil and gas, biotech, materials, and mining, as well as real estate and some semiconductors, while the international ETFs pretty much flat to about the same from last week. As previously indicated, with the dollar moving higher, that's going to put some pressure on the international ETFs, with Greece faring the worst last week, coming off a fairly bullish run during the months of November and December. Individual sectors, we can see real estate was outperforming last week, moving higher. In addition to healthcare, we'll be watching those two for continuation. As we can see with many of these real estate stocks, like Digital Realty, looks like it's going to follow through, pushing through the 21 and the 50-day moving average. Cousins Properties, the Dow Jones Retail REITs, also looking very strong. Centerspace looks good. IIPR from the IBD 50 list. Chemco responding to the news that Simon Properties had all of its properties reopened and open for business, along with Tanger Outlets with the outdoor malls during the Christmas holidays. The numbers were much better than anticipated. So these two look really strong as well. Make a note of it, as we'll probably see some follow-through as the malls' earnings and sales numbers continue to show signs of recovery. This week's IBD 50 list, there's a few less names set up and looking for follow-through. Some of the stocks that are looking very strong are related to the JP Morgan Healthcare Conference last week or Consumer Electronics Show, in the case of General Motors and a few others. But stocks like Bristol Myers Squibb continues to push higher, showing relative strength this week. Broadcom pulling back to the 21-day looks like a good setup. Builders First Source also looking strong, riding the trend in higher new home sales. Etsy pulling back after a nice follow-through last week. Whole Logic looking interesting coming into this shortened holiday week. On Tuesday, we're coming back to the 21-day. Looks like it could see a bounce this week. Real estate REIT stocks like IIPR previously mentioned look like they're going to follow through as well. PKI, Perkin-Elmer, pulling back to the 21-day, looks for a bounce there. Kathy Woods over at ARK, I believe, was adding to PayPal. That's looking very strong at the 21-day. Look for a bounce there. Synopsys looking strong. Argen following through. That's another Kathy Woods stock that she's been adding to. Trade Desk looking for a follow through. Teradyne flagging at highs. Thermo Fisher also looking strong. VIP Shops Holdings at the 21-day looks like that's going to bounce as well. West Pharmaceuticals also looking strong. Despite last week's pullback, Tractor Supply also pushed higher. Many of the candidates over at stock charts that were mentioned as well looking very strong. Abbott Labs, this one looks like it's going to continue higher, follow through. Volume has been noteworthy. We're watching MACD and stochastics turn higher. Amgen, Biogen benefiting from the JP Morgan Healthcare Conference last week. Following through, looks like these are going to continue higher. ATVI, a previous trade that we took around 81, 83 in this zone, followed through, consolidating now, looking for this to break out and trend higher as software and gaming stocks continue. You saw what GameStop did last week. REITs like Avalon Bay Communities, a company that specializes in rental properties, has a very large cash balance where they can take money and buy distressed properties at discounted prices during the current markets. Has a very good balance sheet. One of my favorites this week, looking for a follow through. Volume showing institutions have been active, MACD crossing and stochastics rising. ATR is starting to turn, so we could see bigger candles and bigger ranges. This pop over here having to do with the vaccine news. American Waterworks, a nice utility, obviously dealing with water. Everybody needs water. Nice follow through, looking good here as well. Beyond Meat starting to see plant-based foods picking up a potential reversal signal last week. We also saw Tattooed Chef, another plant-based candidate showing strength last week. EQR, another REIT, looking very strong, following through on above average volume. MACD crossing, stochastics rising, looking for ATR to turn up and signal larger ranges. Fastenal, a previous watch list stock, looking for a follow through, a bounce off the 21-day. Buyers stepped up. Gilead getting a lot of positive reviews last week from analysts. Nice pullback to the 90 MA. Look like it's going to follow through this week. Look at the volume by price bands. Start to move above these levels. Look for a follow through into the 70s. RSI rising, volume picking up, MACD above its signal line, stochastics rising, and ATR bullish as well. General Motors, we traded this one off the 21-day, consolidating. Look for a little fade. If it does continue higher, we could do some day trades as well. Volume shows institutions were picking up shares heavily. On the news, the company is creating electric vehicles being tested with FedEx. Juniper Networks following through, relative strength. Markets pulled back on Friday. This stock continued higher. Volume suggesting institutions are picking up shares, not quite back to the highs. Following the 9 and 21-day, RSI showing muscle. MACD above its signal line, stochastics rising along with ATR. Eli Lilly, Gap and Go, showing institutions' appetite to pick up shares as it moves higher on news of results from its Alzheimer's drug and therapy. Peak Properties, another follow-through candidate, healthcare related. Volume increasing, another REIT that looks like it's going to follow through a descending wedge pattern. Looking for a breakout into the 30s. PPL Corp, another relative strength candidate, moving above this volume by price band. Looks for follow-through, RSIs rising, volume increasing, showing institutions are picking up shares. MACD and stochastics rising. Looking for a breakout and a test of the recent highs. Simon Properties, as previously mentioned, looking for a follow-through after a short-term flag perhaps. Tattooed Chef, another plant-based food products company, looking for a follow through. A little pullback to the 9 EMA, watching for buyers to step up on Tuesday. Volume increasing, showing institutions were picking up shares, looking for a breakout of this cup and handle pattern. A continuation anticipated. United Dominion, another REIT, looking very strong. Volume shows institutions picking up shares. MACD above signal line, crossed over last week. Stochastics rising. Additional stocks, these are from the group that funds are buying and adding to. Looking for follow through in stocks like CELH, EXPI. Just testing the 21-day, looking for a follow through. Buyers continue to show up along the 9 EMA. Volume increasing. Fiverr, another stock funds are buying, taking a little breather on Friday. Still in a bullish trend, looking for a little pullback to the 9 EMA for a buy point. Fulgent from previous watch lists, previous trades. This one continues to show institutions are very interested. Look at that volume. Following the 9 EMA, looks like this is going to continue higher. Potentially a $100 stock if this continues, maybe by mid-year, with improving sales and earnings continuing to propel the stock higher. FUTU pulling back after a nice run, looking for a pullback to the 9 or the 21-day as a potential re-entry if you took this one and sold into strength. GMAB breaking higher. Volume. Cannabis stocks, among others. Grow Generation, this one continues along its bullish trend. Volume increasing. MACD above its signal line and rising. A lot of lithium stocks seeing bullish follow through. Volume showing institutions have been picking up shares. Look for a little pullback for an entry. Sutro Biopharma, relative strength. Stock market pulled back on Friday. This one moved higher. A lot of the small cap stocks fared better, with the Russell 2000 populated by a large number of small cap biotechs like Sutro Biopharma, a lot of oil and gas names, small caps, and stocks like Vertiv Holdings pushing higher last week, VRT. Some additional stocks with price action rising in stocks like this with rising profit estimates, above average volume. MACD, we're looking for a follow through. Etsy, watching how price action consolidates at this level. Above average volume last week, showing institutions have been picking up shares, rising profit estimates, and improving conditions over at Etsy. Management doing their job. Flagstar Bancorp, another name with rising profit estimates. Stock is trending. RSI showing relative strength. Volume increasing, showing institutions have been picking up shares. MACD rising. Many of these stocks following through. IIVI, Enmode, INMD. Look at the volume. Profit estimates rising. Sterling Construction. Many of the stocks showing relative strength last week also look good. Abercrombie and Fitch. Retail. Boot Barn, Retail. CDNA continuing higher. Relative strength, volume increasing. Clack Semiconductor, relative strength. Volume way above average, MACD above its signal line and rising. Live Ramp Holdings following through, above average volume, MACD above its signal line, showing relative strength and muscle. Mohawk Group Holdings continuing higher, riding the trend in home building. Note the above average volume. Price action just now breaking out over the last couple of months. 6 weeks, looking for a follow through. And Tencent Music continues to ramp higher, following through, along with Tenet Healthcare, also showing strength at 52-week highs, volume coming in, MACD above its signal line, and RSI rising. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com this January the 17th, 2021 with your weekend video newsletter. The markets are off tomorrow, so the watch list will most likely be sent out tomorrow. I'll take a little bit more time on it, spend some time with the family, enjoy the additional day off. Take care. I hope this helps. I'll talk to you soon.